Hello viewers, welcome to the Proven Trading Strategies video series. Myself Brijesh Bhatia. In the previous video, we used Fibonacci levels, plotting support and resistance, how to trade those levels. Well, in this video, I will be discussing the most underrated momentum indicator. Well, it is used globally, but using the right way is known to less traders. And I will show you how I use it. And using it with Fibonacci plays an important role with the next indicator which I am showing you. Well, this is the indicator called Stochastics. Any trading software you use, any website you use, there is an indicator called Stochastics. And you will find two lines going over there, like a moving average, like a MACD with whatever you are using. So Stochastics is a simple indicator, but using it rightly will be very effective to you. In this video, we will be looking at what is stochastics, its structure, how it is built up, the traders misconstrue, which means that the traders which are using it a wrong way, and I have been taking so many sessions at various events, and at every time I get a review that stochastics don't work. It goes into overbought, oversold zone quite frequently, and we miss the rally. You might also facing this issue with stochastics, right? And you might have stopped using the stochastics with these problems. I'll use it, and how I'm using it is I'm turning the table over here. So I'll share my way of using it with stochastics. So what is stochastics? Like, understand in a simple words. Okay, when prices go higher, so if you look at the right side of the chart, when prices is going 100 to 200, which means it has gone 100 rupees up. At the same time, it's come back to 160, which means that it has fallen 40 rupees, right? So 100 rupees rise divided by the 60 rupees fall, which means from the difference between 160 to 100. So there is a cushion of still there is 100 rupees up from the levels of 100. So what I have done is I have taken 60, the difference between 160 to 100, divided by 100, which is the lowest level, and I have taken a percentage of this. So it ranges between 0 to 100%. Okay, we term it as percentage K, and percentage D is we are using 3 average, which means generally if you look at the default one, the 14 period percentage K is used, and percentage D is basically the 3 days average of that percentage 14 period. Okay, so try to understand over here, if the prices are faster, which means that the percentage K's go higher, it is the faster oscillator, faster indicator, and percentage D, which is the average, is the slowest indicator. Now, how it has been read is that when it goes above 80, it's been termed as overbought. When it goes below 20, it's termed as oversold. Okay, and the biggest problem what traders face is it goes into the overbought zone very frequently, because being a stochastics, being a faster indicator, if the prices are going higher in a faster way, the move is very fast, the stochastics will automatically go as a faster, because it takes the average of 14 period with the highs and lows. So that's the reason you see that the prices are going higher, oscillator is going into overbought, and you tend to miss this second leg of rally once it goes into overbought, right? Many of them make the mistake over there, and they try to ignore stochastics over here. Similarly, if you look at the right hand side, where I have shown the oversold, prices fell slightly later, that the fall was faster, it gone into oversold territory, and the fall continued on to downside, and you miss those rally onto the downside. Now I am turning the table the my way which I am using it. Now look at the table again. Again, the concept of overbought, oversold is same. I am taking overbought as above 80, oversold as below 20. Now what I have done is I am using percentage K as 21 period. The default one is 14 period. I am using it as 21 because I am not an intraday trader. You can use as percentage K as 5 as for intraday, but I am being not an intraday trader. I am basically looking for a slightly positional moves. So I am using it as a 21 period. I am not taking it as an average. Percentage D, I have ignored it. That's my second rule. My third rule is define the trend first. And I am not taking any advanced level theories over here. I am just taking a Dow theory, which is basically when the prices form higher high, it's bullish trend. When its prices form lower high, lower low, it's form bearish. Okay. Now identify the trend as per the Dow theory. If it's forming higher high, higher low, it's continuing with the bullish trend. Once the previous low is breached on the downside and it forms lower high, lower low, the trend change from bullish to bearish. Well, these are the three rules you have to keep in mind before going on to my theory. Okay. So when you have identified that it's bullish or bearish. Okay. When it goes into overbought zone. Okay. When it goes into overbought zone, use that dip when it comes back to the oversold territory, use that dip as an buying opportunity, because still my longer term trend or the as per the Dow theory, the trend is bullish. So when it comes into the oversold territory, I will use it as a buy opportunity, not a sell opportunity, when the trend is bullish. When the trend is bearish, I will use it when overbought territory as a short opportunity. So basically, these overbought oversold zone identifying a trend is a pullback for me. So as I said, when these prices rally faster from 100 to 200, the fall will be, retracement will be faster. So your overbought zone to oversold zone is faster, but the trend, overall trend is still bullish. So I am using this pullback as an entry level for longs. Let me put onto the charts over here. So if you look at the first chart, it started with oversold territory, went on to higher. Now if you look at the left side, both the lows are very much same on the price as well as the stochastics. So that was an indication that it's trending out to be a good bullish trend over here. Trend is emerging. Still the higher high, higher lows are structure is still open. And if you look at the whole rally went out. Look at the second, it retraced, it went on the oversold territory, again a buy opportunity, because still the overall as per the Dow theory, it's bullish trend. Now again the higher high, oversold territory, a buying opportunity. Then this time it didn't went to the make the higher high. The next chart, the bearish one. Okay, I am continuing with the same chart. Now the high was not made, but we broke the previous lows, which means that the bearish trend has emerged. The trend change from bullish to bearish has done. And stochastics at the same time, when it comes to overbought zone, I will look a short opportunity. And if you look at the similar structure happen for quite long. So I am turning the table onto the stochastics, read it as a pullback into overbought zone, and it will definitely help you to make big money over here. So that's the stochastics. Well, coming on to the strength as per the rules, the strength is that being an early indicator, it focuses on more on the prices like other oscillators, which focuses on the other aspects as well. Being a fast indicator, it gives you early sign. Riding the waves really helps you out because you are riding the bigger trend over here. In the second video, we done how to identify the trend. Again, the strength is pyramiding will really help you out. If you are a long and there is a pullback, oscillators or the stochastics into the oversold territory, again a pullback, good pyramiding area, take an opportunity to pyramid the trades. Well, the weakness, some of the weakness it has is frequent overbought oversold zone. As I said, most of the traders misconfused with the term that it is gone into overbought and it's time to go short. It is oversold, it's time to go long. Well, that's the biggest problem with stochastics, that it goes into overbought, oversold frequently. And lack of confidence on riding the trend generally happens with stochastics. Well, on to summarizing the session. Stochastics, the most underrated oscillators, and I request try running the table with your trading style. It will definitely help you out. Trader looking for long in oversold, short in overbought will definitely help you, as I turn my table on the my way of how I use it. And it's been simple, identify the trend and use this pullbacks into definitely a good setups on pyramiding and riding onto the waves. That's all into the stochastics. In the next video, we'll be measuring how the real strengths build up into the price trends. And as I said, the movement indicator on the stochastics, but in the next video for the medium term trader, or the next video will definitely help you out on identifying the strength into the price trends. Thank you. Signing off, Brijesh Bhatia. I am delighted that you joined me to learn about my proven trading setups. If you would like to hear more from me, then sign up for the Fast Profits Daily, our free email newsletters. You can click here to sign up. Thank you.